companies when they were underpriced. And of course that worked pretty well for us. Stocks underestimated by the industry are actively sought after by value investors. They argue that the marketplace reacts to both positive and negative news, causing fluctuations in stock prices that are inconsistent with the company's fundamentals over the long run. According to Munger, the market's reaction offers a chance to profit by obtaining a bargain on stocks. Most people know that buying stock also means purchasing a stake in the company. As a result, Munger advises choosing your stocks wisely and treating them like your own firm. While you monitor the company's performance, refrain from withdrawing money too quickly. You should only invest in yourself using funds you are willing to commit to for at least the next 5 years. The most excellent strategy to maximize your gains is to focus on the long run, particularly during times of volatility. Gold bond investment. Given that they combine the advantages of gold holdings with the fixed income component of a banking fixed deposit, gold sovereignty bonds, SGB, are among the most excellent investment options. The main principle of wealth creation is to gain more while losing less. As a result, even when gold prices fall, the value continues to rise. Gold has recently maintained stable pricing and has become a haven asset during market downturns. You receive fixed interest and the benefit of rising prices when gold prices eventually rise. You stand to acquire a significantly larger sum of money from gold securities than other investments when you invest your money for the long term. Index funds. An excellent option for a beginner investor to explore the extensive stock market is through index funds. The S&P 500 is one of the most well-known indexes. It includes some of the biggest and most prominent corporations in the world, including Facebook, Tesla, Apple, Microsoft and others. You can't really fail at it unless you buy the wrong stock or just get excited at the wrong time. But if you own the cross-section of America and you put your money in consistently over the years, there's no comparison against owning something that's going to produce nothing. However, before investing in this category, it's essential to note that the right-hand man of Warren Buffett, Charlie Munger, a Berkshire Hathaway executive, recently voiced his concerns about the state of the markets. He made a sobering future prediction that investors shouldn't overlook. To safeguard themselves, investors should review their portfolios if they are concerned about a financial collapse or believe that equities are too expensive. Investors should consider purchasing shares of a reputable healthcare stock like Johnson & Johnson, J&J, rather than Amazon at a PE ratio of over 70. It is a much more affordable investment at a PE of 28 and the company is very strong. It checks off every essential box that value-conscious investors could be searching for. It also has continuously generated profits and just once during the previous 5 years did its net margin drop below 17%. Johnson & Johnson still has growth potential, even though its revenues of $82.6 billion for 2020 were marginally higher than its $82.1 billion total for 2019. Moreover, Johnson & Johnson Inc. is a dividend lord with dividend increases going back over 50 years. The most recent addition was in mid-2020, when it increased its repayments by 6.3%. Now shareholders received $1.01 in quarterly dividends from the corporation for each share they own, yielding 2.6%. Avoid saving the entire amount. Savings accounts are the best way to safeguard your money. In this approach, you will always have accessibility to it and won't need to be concerned about your principal deposit depreciating. While having some financial security in cases of crisis is beneficial, you should avoid depositing all your funds in savings accounts. There are plenty of people that I don't advise to save. I mean, if you're struggling along and making a reasonable income and you have a job with a 401k put aside for you and you have Social Security, who's to say whether it's better to defer $1 of expenditure on your family on a trip to Disneyland or something that they'll get enormous enjoyment out of, so that when you're 75, you can have a 30-foot boat instead of a 20-foot boat. Even if interest rates were higher than they are right now, they might not even come close to matching the gains you can get from investing in a trading account. Contrary, there is danger involved with investing. Yet if you're willing to take that risk, you can increase your return on investment above what a savings account offers. If you feel this video has greatly assisted you in making wise investment decisions, kindly like it and subscribe to my channel. It would be best if you also hit the notification bell to be alerted as soon as I upload another video. I'll continue to share more valuable financial information and advice from reputable global investors to enable you to attain your financial objectives in 2023.